Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a bang, as two major players in the tech industry are making headlines. First up, let's talk about Alibaba, the Chinese e-commerce giant that's been on a tear lately. The company's stock has been rising steadily, driven by its expansion into the AI space. CEO Eddie Wu recently announced plans to increase the company's AI budget, which has investors taking notice. But what does this mean for you, the investor? Should you be jumping on the Alibaba bandwagon, or is this a case of hype over substance? We'll take a closer look at the numbers and explore the potential risks and rewards of investing in this Chinese tech giant. On the other hand, we have OpenAI's rival, DeepMind, which has been making waves in the AI research community. The company's recent breakthroughs in large language models have many experts predicting a major shift in the way we interact with technology. Now, let's switch gears and talk about OpenAI's valuation. With the company's stock price soaring, some investors are starting to wonder if it's overvalued. We'll examine the arguments for and against, and discuss what this means for the broader tech industry. In other news, Cathie Wood, the well-known fund manager, has reopened positions in Alibaba's American Depositary Receipts after a 4-year hiatus. This move has sparked interest among investors, who are eager to see if Wood's bet will pay off. As we continue to navigate the complex world of stocks and finance, it's essential to stay informed and adapt to changing market conditions. That's why we're here to provide you with the latest news, analysis, and insights to help you make smart investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show, and we've got some exciting updates to share with you. Let's dive into the world of finance and business. We have two interesting stories for you today. First, the Reserve Bank of India has made a significant move by allowing banks to provide financing for corporate deals and mergers and acquisitions. This decision is expected to boost the Indian banking sector and provide more opportunities for businesses to grow and expand. The RBI's move is seen as a positive step towards promoting economic growth and development in the country. On the other hand, we have Avenue Supermarts, the operator of retail chain D-Mart, reporting a 15.4% year-on-year revenue growth for the second quarter of FY26. The company's revenue from operations stood at Rs 16,208.79 crore, with the total number of operational D-Mart stores reaching 432. This is a significant milestone for the company, and it will be interesting to see how they continue to perform in the coming quarters. It's worth noting that both of these stories have the potential to impact the Indian economy and businesses in different ways. The RBI's decision could lead to increased lending and investment in the corporate sector, while D-Mart's growth could indicate a positive trend in the retail industry. As we analyze these stories, it's essential to consider multiple perspectives and potential outcomes. We'll be keeping a close eye on how these developments unfold and providing you with updates and insights here on the Riskwiser Zone. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're approaching the end of today's show, and I want to bring you up to speed on some exciting news from the world of electric vehicles. Tesla, the pioneering EV manufacturer, has just released its third-quarter delivery numbers, and they've beaten Wall Street's estimates. The company reported 497,099 vehicle deliveries, a 7% increase over the same period last year. This is a significant milestone for Tesla, especially after a rocky second quarter that saw revenue decline by the most in 10 years. Now, it's essential to consider the context behind these numbers. The federal tax credit of $7,500 for EV purchases expired on September 30th, and many analysts believe that this incentive drove sales in the third quarter. In fact, Tesla had a countdown clock on its website urging buyers to lock in their purchases before the credit expired. This raises questions about whether the company can maintain this momentum now that the tax credit is no longer available. Some experts are cautioning that sales could wane without the tax incentive, and there's also increased competition from Chinese EV manufacturers. Ford CEO Jim Farley recently commented that Chinese companies are dominating the US EV market, including Tesla. Hedge fund manager Ross Gerber, a Tesla investor, tweeted that while the rush to cash in on the tax credits helped the company's third-quarter numbers, winter is coming, implying that the lack of incentive could lead to a slowdown in sales. As we analyze this news, it's crucial to remember that the EV market is highly competitive and subject to various factors, including government policies, technological advancements, and shifting consumer preferences. While Tesla's third-quarter delivery numbers are undoubtedly impressive, investors should remain cautious and consider the potential risks and challenges ahead. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.